Good morning, all, and welcome to this morning's video. So, I have just the one pair on watch today, which is Pound Aussie. I didn't make a video yesterday because I had a very busy schedule. I had a webinar to attend in the morning as well. I did put a post out. If you're watching on YouTube, I did put a post out about that in the morning, but for some reason it wasn't sending. So, I don't know whether that actually went through or not. But regardless, I'm back again today, and I have one pair on watch, Pound Aussie. The rest of the market just looks like it's trying to find its feet, moving sideways. Okay, so we're going to not do what the amateurs do. We're going to let that develop, let the price action on those pairs develop, and reconvene at a later date. But the one that stood out to me this morning was Pound Aussie for a variety of reasons, which I shall break down now, and I shall probably go into a little bit more detail just because I only have the one pair on watch. So the pair that stands out to me is Pound Aussie, obviously, and the reason it stands out to me is because, yes, on the higher time frames, it doesn't. If you just look at this, it doesn't necessarily look that nice. I could break this down for you if I wanted to, but once you start to see these patterns enough, you start to be able to decipher what would to others be mess, okay, and what to me was mess when I was a little bit newer. But now, with a little bit more experience, I can break these uh, such pairs down. And what stands out to me is that we have this impulse correction potential continuation to push lower, and one of the reasons that we would likely do that is because we have a slight gap here to this low here. Okay, so you could argue we kind of met that area because the miss was only kind of negligible. Okay, but we did miss it in the form of a wick. We know that these wicks often get filled. Okay, and it would make logical sense especially because we've had a near miss to this low and this low here. It would make sense for price to come back down to take out this low, and this low near miss too, because as I've said before, if people are, especially if people are, when it gets down to here, if people are buying, many of these people will likely have their stop losses. They will likely put their stop losses in this area if they're adopting a more of a wider stop loss or a swing trading style approach. Okay, so you can see that we have the near miss here to this high. Okay, as I said, if people are selling here, where will many of these have their stop loss? Perhaps above here. Okay, so we come above, we tap into the area, and it appears at this moment in time that we're moving to the downside. Okay, you can see that on the 4 hour, I like the fact that we have we've had confirmation on the 4 hour, a bit of a wick below it, which is probably why price is consolidating sideways. But we have an evening star formation, okay, which has retested as well. If we just extend this out, whoops, we have retested and rejected from the back end of all of this. So that's another tick in the box. Previously, I was looking for, where was I looking? I was looking for rejections here, and I may as well touch on this uh, before we get down to what I'll be looking for today. So previously, I was looking at this as a rejection area. As I said, I'm not interested in being right. If you're new to my videos, trading is not about being right. It's about managing risk. Okay. So I was looking at this as a potential area that we may reject from because we had this structure here. We had the 1, 2, 3. We had the middle section. Okay, and we tapped into that area. Now, I was fully aware that we had highs above, and price does tend to naturally gravitate towards the more attractive value. But that's why we wait. That's why I was waiting for, or one of the reasons why I was waiting for. So we had the evening star there. Okay, but look at this big wick. Okay, I was waiting for a push down and a flag. If you look at yesterday's forecast, I remember I was looking for this. Okay, and since I didn't make a video that day, I may as well break down what I was looking for here. I was looking for a flag like this, but I was looking for a risk entry within the structure. Okay, not an entry on the break, because if we had the entry on the break, we had something like that. If we just discount this as a volatility wick, that would be quite difficult for me to manage. People might say, well, you've got 1.5% to the low, but I've got a very busy schedule. So at the minute, although many people may have been able to manage a flag, which, well, if we had an impulse down and a correction afterwards, by getting short on the break. Because of my busy schedule, I'm factoring that in as well, which is why I was only looking for the risk entry within the structure. Okay. If we just move that over, so that if we rejected from that low, okay, if we flick to the line chart, that wick doesn't appear. So I'm not, that's just a volatility wick. I would have been able to manage that to the low for something in the region of 4%, but we didn't get that tight correction. Okay, so this tight correction would have been the confirmation that we didn't need to go all the way up to this high and up to the high that we're up to now in order for price to move to the downside. Okay, so we wait for that to confirm that we're not going to do what price actually did, and we didn't get that. Okay, we got the kind of evening star, we got the push down, and there was no correction. Okay, even if we drop to the 15-minute chart, there's no three-touch correction or two-touch correction with a three-touch structural approach. You might be looking at this going, well, what about that? Well, it's just consolidation. Where's the structure? I can't see the structure. The 5-minute chart is the lowest we go to, and I can see two bottoms, but I can't see anything. So even if you set an entry on the break there, and you were looking for the risk entry there, you wouldn't have been tagged. You wouldn't have been tagged in. Okay, so that's why we wait for that to confirm, just in case price does what it subsequently did. Okay, let's get rid of this. There we go. Right, so then we tapped into that high. What did price do? It did the same thing again. It broke above, it wicked down, and then pushed straight back up. So if you were looking for a trade here, you would have waited for the sensible thing to do would have been to wait for something again. I personally would have waited for it back below here. Okay, but even if you waited for it there, you wouldn't have had that. You wouldn't have been tagged in. So now price has gravitated to the origin of the move, which is always the stronger magnet. So if we look at all of this consolidation, where's the strongest? Where's the origin of the move? It's here. Okay, so price has tapped into the origin of the move. Now it's pushing down, and now it is moving correctively. Okay, but we have, as I said, we've on the daily chart. We moved to that area by way of momentum. We have had a rejection there. You can see on the daily chart, but this is what we call a signal, not confirmation. We have confirmation on the 4-hour chart by way of the evening star formation. Okay, the last leg, as I said, it does tend to have momentum if we're going to reject from an area as the buyers get out of their positions. Okay, and it's easier for the market to be moved about as the liquidity drops. We then have we have this impulse correction continuation to the upside. If we measure that, we've fulfilled that now. So what I'm looking for now, all I'm looking for now is, so we've tapped into the area, and all I'm looking for, we can take that off now, is I'm looking for a break back below here. You can see we're kind of floating through it at the minute. What I'm looking for a break back below here, and a 1 hour, a 3-touch 5-minute continuation, or a 2-touch 5-minute continuation with a 3-touch structural approach. And if we got that, I'd take a reduced risk entry on the break of the flag. If we got the slightly larger correction, so the 15-minute continuation or a 2-touch 15-minute continuation with a 3-touch structural approach, I'd look for the same thing again, but I'd also be looking for the risk entry within the structure. And in this instance, you can see that I would be able to manage it down to this first target there, just cutting through the wick once again for something in the region of 2.4. So in this instance, I would take the entry on the break, unlike what I was looking for yesterday, because of the fact that I can manage it down to here for something in the region of 2.4 if price was to respond from there and become a bit more complex. Okay, my schedule when I'm factoring these things in would permit for that. But my target, which is why I had my arrow there at the start, would be, okay, if we measure from the range down to there, okay, so my target would be the near miss, okay, and what I would do is, well, I would set the mechanical management tool down there at the low, and then I would measure from the range 90% of that range, which would take us to there. So essentially my target is the near miss, and I'm just setting my take profit just above it. at the 90% area, and that would give us something in the region of 6.85 to work with. Okay, so that's what I'm looking for. I've just set since we're kind of floating around the area now, I've set a Google Calendar reminder to remind me to check this in an hour's time, because it's not clear at this moment in time what price is doing. We may be getting a correction up here. I'm personally not interested in that, because we're kind of floating through this price. Okay, and the move down itself hasn't been that typical. If we just look at this so far, how this has moved down, okay, that is not typically how we respond from an area of value if we're going to move to the downside. Okay, so we would normally see these little tighter flags into more tighter flags. Okay, and as we move down, they start to get larger as price needs to build volume for it to be able to continue in the direction. And if you look at this, so this sequence, let's just take this a second. Let's use the bars pattern tool. Okay, now we can have corrective waves that drop out, and if I had a bit more time, I'd go into detail about that. But this is not your typical sequence. Okay, so I'm not convinced by this at the minute, because this looks like, especially with the market going sideways all over the place, this looks like it may be another trap. Okay, we're seeing lots and lots of traps at the minute. The fact that it's not overly clear. It's not overly clear. The structure of this is not overly clear at the minute. That's another. If the structure is not clear within a correction, then that may just be, often that is just consolidation. So when there's more candles than there is space between the candles, that's a better way of explaining it. Often these can end up breaking to the upside to retest the high again, especially if they've moved down correctively all in all, and then you end up looking for a rejection from here. You get tagged in, tagged out, and then price moves to the top again. And then you start saying that the market is manipulated and all that kind of rubbish. Okay, it's not. You just don't understand price action properly. Okay, so I'm just going to let this do its thing. Okay, I'm just going to see what happens here. If we start to follow through and then we get the corrections afterwards, then I'll take one of those, provided that I can manage it to the low. And I'll be targeting the same area. But we should see. Okay, so that is pound Aussie. That's what I'm going to be looking for. Okay, this doesn't surprise me if you look, pound Aussie, if you just look historically, it moves sideways. It's a corrective pair. So corrective pairs, you have to be a little bit more skilled with corrective pairs because of the nature of how they move. You have to be able to decipher between the patterns. Okay, you have to just be able to pattern separate, which is one of the more advanced aspects of the way that we trade. But I hope you've enjoyed this video, folks. I will bid you farewell. I will see you in the next video. It is currently Friday. I was going to say it's currently Friday here in the UK. That would have been a bit silly, but it is currently Friday. I will be back next week with another video and more videos, no doubt. And if this pair does provide an entry, then I will, of course, update you as to what happens with the trade, whether I'm still in it, whether I was taken out, whether it was a win, loss, break even. I'm not interested in what I call the rented. I'm not one of the rented Lambo brigade, as I call them, the people that you see on Instagram that take 100 losses and then when they post a win, they quickly go and hire a Lamborghini for the day, pose next to it, post loads of pictures, and then ask you to sign up to their signal service. I do have a link in the description of this video if you're watching on YouTube, and on my YouTube profile. That is my ambassador program referral link, which will take you to the webpage of the Falcon community that I'm a member of. And you're welcome to join that, or just have a look at it if you wish. But if you don't wish to do that, I couldn't care less. Okay, we'd be welcome. We'd be grateful to have you in the community. I do make a 30% commission on that, but that is just one of my little income streams. It's not, what I'm trying to build a life on. Okay, it's just a little additional extra, but I don't care whether people sign up to that or not. If they do, great. If they don't, that's absolutely fine. If you just want to continue watching this free content on YouTube or on TradingView, absolutely fine too. Okay, I like making these videos and I enjoy helping people, because I remember how frustrating trading was for me when I didn't have a clue what I was doing. Okay, so I do get a kick out of helping people that may be going through the same or a similar level of frustration in the earlier stages of their trading journey. But as I was telling my nephew a few days ago when I spoke to him on the phone, he's trying to learn the guitar. I said to him, I'm not going to tell you his name, but I said to him, playing the guitar takes look, getting good at anything takes a long time. Okay, people give up too early. And I said to him, I said it took me 2 years to be able to play a song on a guitar, right? Just literally just transition between like 3 or 4 chords. I said, admittedly, I didn't practice all that much. I said, if you practice a lot, I said, you will get better. I said, some days just with trade, as with trading, I said, you'll wake up, you'll practice and you'll feel like you're not getting anywhere. Okay. That happened to me in trading. I said, and then one morning you'll wake up and you'll be able to do something that you couldn't previously do. Okay. And I said, that's because of all the repetition of all of the practice. And he was telling me about somebody he knows that plays the guitar that said, that they've forgotten a lot of the stuff they uh, play because they haven't practiced for ages. I said, well, that's why repetition is important. I said, it's not a case that you just practice and that's it. You just chill. You have to keep doing the thing that got you to where you are. Okay. And I said to him, I said, you might be it might take you a few years to learn to play the guitar. I said, probably not. I said, if you practice more than I did. I said, but you might be a faster learner. I said, you might be a slower learner. I said, but if you stick with it, I said, trust me, you will get better. And he listens to me, okay? He listens to the things I say. And that applies to anyone that's trying to learn to trade. You might be thinking, this isn't working for me, blah, blah, blah. Is it not working for you, or are you not working for it? It's very easy, particularly for us fellas, all you fellas out there, to blame the strategy, to blame everybody else, to blame market manipulation, blah, 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 etc., etc., etc. Women, in my experience, tend not to do that so much, probably because they're not as egotistical. And that's one of the reasons that women, in my experience, tend to find it easier to look in the mirror and say to themselves, maybe the problem is me. And that is perhaps why a disproportionately high number of women, in my experience, tend to do well at trading. They often do tend to take a little bit longer sometimes, but they tend to get very good at it because they're not as impatient as some as us fellas, and they tend to be able to look themselves in the mirror and say, look, right, what mistakes am I making? Not what's wrong with the strategy, what's wrong with the market. They look internally for the answers and for the improvements, not towards other people. Okay, so if I could give you one piece of advice, it's stop blaming other people, blame yourself when things go wrong. Okay, the market is just doing what the market wants to do. It's not manipulating you personally. The market doesn't give a shit what you're doing. Okay, there's so much liquidity on there. Your liquidity is so small. If you knew how much liquidity is actually being traded, that it's irrelevant to the bigger players. Okay, but I just thought I'd go off on a bit of a tangent there. But I hope you've enjoyed this video, folks, and I will be back on Monday, most likely with another video. Have a great rest of your day. Have a great weekend, and I will see you again soon. Thank you very much indeed for watching.